Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities and ETFs that this guy follows. I'm going to interject my financial opinions as we go. And if you need any help with anything, check out finding-value.com. We have the discount in the coupon code if you guys want a discount. And we do have a question and answer session at 7 a.m. Tomorrow, which is Saturday, Mountain Standard Time. If you guys need help or have any questions with anything. All right, let's dive in here. I'll give you my opinions on what's going on. So we've got the DXY. DXY is very sensitive to interest rates, and we are still moving sideways with the dollar. We've got this potentially big flag pattern, which is generally a continuation pattern to the upside. Generally speaking. But within this pattern, we also have very strong selling pressure and kind of a weak bounce inside of that, which could indicate that we could be inside this pattern for even longer. So let's look at rates. Rates are generally a precursor to stronger dollar or weaker dollar. What generally happens is yields continue higher, and then the dollar generally goes up as monetary tightness of the dollar is stronger than the currencies it's being compared to. So the 2-year, it is moving on up 0.64%, but we're right up against resistance. And this is an important area because if we can punch through to the upside, I think that we could still see perhaps further yield strength or higher yields, I should say, but it's also at a location where we could easily roll back over. If there is a weakness in the market, if there's going to be a recession, if there's going to be a slowdown, generally what we see is the yield curve inverts, it uninverts, and generally the 2-year is what falls. But as of right now, the 2-year has been pretty resilient. And we may not be in that slowdown period yet. Generally, before a slowdown, you get a strong movement in the 2-year lower before those problems. And we haven't seen that yet. We're still hanging on, and maybe it's by tooth floss or something. I don't know what, but we haven't seen it fall yet. And this could very easily reaccelerate to the upside. So that's something that I'm watching and something that I'm trying to keep my eyes on. The 10-year was basically sideways, and we could gather ourselves up here and try to move higher if it decides to do that. The 10-year, I mean, obviously on a long term, we've broken all of these downtrends. We do have a little bit of a bearish candlestick here on the monthly, but that could change. We still have a good portion of the month left, and we could easily bring this back up if the market wants to push it back on up. So we'll see if we get a bounce here. TYX is in the same situation. We've pulled on back short-term wise, but we are consolidating right where it's at and could easily head higher to the upside and have yields move on up. So from a yields perspective, I'm really watching that 2-year to see if it dives down. If it really starts to dive down, that is generally when we see a slowdown in the market. We see this short end of the curve really start to come back. TYX TNX ratio inverted quite a bit today, pulling on back. What does that mean? Well, it means that the conditions for gold and silver have not improved yet. We're still waiting for those conditions. Now, if this starts to really dive to the downside, where the 30-year is outperforming the 10-year, or the 30-year goes down more than the 10-year, however you want to look at it, that means that the conditions may not be ripe for gold and silver yet. That doesn't mean that they're bad investments. It just means that the conditions aren't there at this second. Historically, though, if you look at these general areas, they've all been very good opportunities for precious metals in these periods. So we're in the good location. We just haven't uninverted the curve yet. Bond prices are coming up a little bit, 0.56%. And again, it's another thing I'm watching. Are we going to break kind of, is this an inverted head and shoulders that's occurring? It's kind of a messy pattern there, but we'll see. And we're kind of at a point where, I mean, this could go either way. And that's why we continue to watch it. We very well could pull back down and start to sell off in the 20-year bond price, which means yields are continuing higher. Very possible. And we're at a spot where a lot of the data isn't in full alignment anymore in terms of unemployment, delinquencies, inflation, some of the liquidity in the system, et cetera, et cetera, et cetera. Longer term, I think we're going lower with higher yields in the longer term. Short term, I'm only speaking short term here. Gold selling off $28 an ounce, and we are pulling back to the support level down here in the low 1900s. And that is something that we could hit over the next few trading sessions or maybe week or two. And again, we're looking at the market conditions, and the market conditions at this exact moment in the short term are not favorable for gold yet. But I think it's going to change at any second. That's kind of my viewpoint, and that's why we're sitting up here. It's almost as if gold is waiting for weaker yields, a weaker economy, weaker yields, and perhaps some sort of liquidity that's being added to the system by the Federal Reserve and or maybe the Treasury or whatever it is. Silver also selling off. Looks like we are coming a little bit lower. Could we come back to the $19 level even? It's possible that we do sell off and come back to this lower trend line there. Very much possible. What does that mean? Well, maybe we're not in a recession yet. Maybe there's still inflation in the system and that the players in the system do not believe that that is out of the system yet. Platinum also selling off. We're down to 845. I still think that we could even sell off further. This is a big kind of last washout sale, perhaps. Maybe we even hit low 800s. That is a possibility. And that would be a really good entry point if it does get down there. Palladium also selling off. I've got that big long-term trend line that I've got up there. And here we are almost touching it. I'm surprised it actually came down here, but this could be a good opportunity for those that are looking if it continues to head a little bit more lower, or we start to see reversal candlesticks. I don't try to catch the falling knife. I just let it fall until we base out, and that's kind of how I enter something. XAU to gold ratio, gold and silver mining companies slightly outperforming gold itself, but nothing really to talk about here. It's just kind of a small 0.17 up day, and that's all it is. CRB Index is flat, just moving sideways there. Again, that's what it looks like right now. We very well could dive before heading higher. Strong possibility. CRB to S&P still falling on back. And it makes me think that liquidity, stuff like that, maybe there is a slowdown coming. That's where this ratio would underperform in the short term. So we're coming on back with this ratio. Overall, I think that we are going to go far, far higher in the longer term due to the inflation that I think is coming in the system, whether it's from fiscal spending or from the interest payments and stuff like that, or it's from loaning in the banking system against new homes. And I know people, that's fine if you disagree about the housing market, whatever. I think it's an affordability problem. I don't think it's from a hypersupply phase. GDX down a little bit, right kind of underneath that resistance line. We popped on back from that. GDXJ also down and SILJ also down. Now, these guys are driven off of margins. And some of the companies, their all-in sustaining costs have increased. And they are struggling. So we're seeing that in the ETFs as well. Crude oil, it likes a yield curve that inverts. It was up 2.13% today, up to $77. So we are getting support in that general area of the mid 70s. I'd like to see what this thing does. If we get a weak bounce, we could definitely roll over. If it continues up strongly, then we could be putting in a bottom. Depends on what the trading actions are over the next few days, weeks. TTF still looks good to me. I mean, we were down today 2.88%, but we're above a lot of support. And to me, this looks like a bottoming pattern that's going to eventually work its way on higher. So that looks good. Nat gas down a teeny bit, 0.3%. We're right back against this support level. So we're right on support for nat gas in America. XOP, yeah, you know me, up 1.1%. Sometimes we do these bottoms where they bottom, come up, and then they bottom again, and then we'll see if we get a bounce. So XOP, we were up today, but I'd like to see a big green candlestick that comes in here like a bullish engulfing, hammer candlestick, bullish piercings, something like that to indicate that we could potentially be bottoming. We can see that the momentum is slowing down and starting to move sideways. So that is at least the beginning traits of a potential bottom, but we haven't bottomed maybe yet. I'd like to see more data. OIH up 1.4%. It's bouncing off this trend line. It's pulled back quite strong. So again, I'd be hesitant and I'd be waiting to see what the next few trading sessions and or weeks bear out here. Sprott Physical Uranium Trust up 1%. Looks okay. Looks good. Again, let's hope the trend continues to the upside. URA up a little bit, and we're just kind of slowly grinding on higher. Same with URNM, just slowly grinding on up, about 1% higher. And then URNJ was flat for URNJ. TAN down a little bit. Again, this is momentum to the downside. I wouldn't jump in front of that renewable train. COPX flat today, 0.16% higher. Again, we'll see what happens. We could easily go down to the $29, $30 level if it decides to get down there. I think that's a good spot to be looking we've got a strong support coming across here. Lithium continues to head lower. Again, guys, the downtrend's not broken. Just let it go. Let it keep going. REMX downtrend still intact. I wouldn't touch it. It looks like a lot of people are selling these renewable trades in the market. Lithium, rare earth metals, solar, renewables, all those things. The S&P 500, surprisingly, was up today quite a bit, 1.5% up. We had a bearish engulfing yesterday, which generally works its way lower. But someone or something pushed us above this resistance line, and we'll see how sustainable that is. NASDAQ, same thing. We had a selling pressure day yesterday, generally indicates a lower move, and here we are up 2% today, indicating a pretty strong move in the NASDAQ to the upside. KRE, this still looks all right to move higher, in my opinion, as we've broken the downtrend line here. We've come on up, we've filled the gap, and we're just slowly leaking off some sellers. And sometimes this does a back test, which is possible before heading higher. So that still looks really good, and we're at the bottom of a big, maybe a Livermore accumulation cylinder is potentially where we get a big move to the upside. And I'll have to see if this actually plays out. Emerging markets, up 0.71, weaker dollar, weaker yields. This looks really good to go higher. This is basically a flag pattern. I just drew it in real quick, but that looks really good to continue higher. XHB also looking very strong. I like how these are trading sideways, and it's basically breaking, turtle heading out of the flag pattern. So this looks good to go higher for home builders. I know people think that we're in some huge glut of homes. That's not what the home builders are suggesting. We've got a downtrend line break, and to me, it looks like we could head higher in the home builders ETF. MU heading a little bit lower. Looks like it's trying to base out here. I like how we're keeping support here. I like we got a wick at the bottom. This looks very good, in my opinion, to try to base out here, which means you just go sideways and kind of establish a base to go from. Copper acting a little bit weak here, down 1.21%. If we see copper dive, that generally indicates a weakness in the market, a slowdown. And copper has been holding on, been moving sideways this entire time here. I would say if we lose the 325 mark down here, that's signaling slowdown in the market. Iron ore continuing to head higher. This is one of an area that I really like. Iron ore has been killing it. We've got a gigantic pattern, falling wedge. It's broken to the upside, and it's been working its way higher. Again, we're going to get pullbacks and consolidations as we go, and it's going to be kind of a stair-step pattern that I'm envisioning that I usually see. Nickel, I'm going to skip that. Aluminum down 0.78%. We're still within this channel going back and forth. We're still above the big support levels. Baltic Dry Index trading much like iron ore, moving on up 4.5%. I still think Baltic looks really good. Iron ore looks really good. And coal is starting to bottom, which also has an impact on Baltic Dry Index. So those vectors look pretty dang good to me. Newcastle coal looking like it's trying to put in a bottom here. It's basing out. And maybe it's going to put like a shoulder deal or something, whatever it decides to base out in. But that's looking better, and I think it's in a really good location, right above support. Big long-term support line. Bitcoin continuing to do well, 1.83%. This looks like it could just continue higher. I think it looks really strong. Bitcoin's looking fantastic from a longer-term perspective. Looks really good. And then Ethereum down a little bit. But again, this is just a bloody nose. I think it's going to continue higher. We could see a couple of small trading days downward, and then we get a rip to the upside. So I think it still looks really good for Ethereum as well. So that's what I've got for today, guys. Don't forget to give me a thumb up. Help me out. Check out the website if you guys feel the need to. Overall, again, we're just going to have to wait and see. A lot of these patterns are trying to work their way out, giving us more information. The sectors that I think that look really strong at this exact time, iron ore looks really strong. Baltic Dry Index, those are two that stand out. Ethereum and Bitcoin look very strong. Those look really good. Everything else is kind of trying to base out. Natural gas doesn't look too bad either. They've broken out and they're just doing the retest move. So crude oil's got some work cut out. We've got some pretty strong selling pressure before it. And that's kind of what I see in the markets at this exact time. And some of them are still basing on top of breakouts like the agribusiness ETF move. Newcastle coal futures, they're coming back to their support levels and starting to base there. So it could be some time. Maybe there is a slowdown in the market if we lose copper to the downside. So we'll continue to watch it, continue to monitor it, and I'll keep giving you guys my opinions as we go. All right, guys. We'll catch you at the meeting Saturday, 7 a.m., and we'll catch you later. This is Finding Value.